Happy day. I'm Reshma from the Department of Commerce, and today we'll be discussing or covering the topic vouching and verification. Let's say a business says their financial statements are true and fair, but how can we prove it? So there comes the need for auditing. For auditing, there should be a qualified personnel to go through and verify through the transactions of the company, and then they will give an opinion whether the transactions and the financial statement of the company is true and fair. There are other purposes for auditing as well. So if you see, it's not just providing or assuring that the financial statements are true and fair. Along with that, it actually helps in enhancing the credibility and the confidence of the company stakeholders. It also helps in improve internal audit or internal control and operational efficiency, through which it can help in detecting or preventing errors and fraudulent activities. Now, as I told, to prove that a financial statement is true and fair, there are two foundational aspects or the pillars of auditing. One is vouching and another one is verification. So let's dive into what is vouching. So coming to vouching. Vouching is the process of examining documentary evidence to verify the authenticity and accuracy of transactions recorded in a company's books of accounts. So vouching basically says that if an auditor is taking a transaction, then the transaction needs to have some source document to prove as a proof that it is actually an actual transaction. So for that, the auditor will ask for source documents like, say, invoices, the receipts, say bill, etc. So it's like you see a transaction, you ask for source documents and you compare it. You check these two and make sure that it is a genuine or accurate transaction. So coming to vouching transaction. So in accounting, the only rule it says that if you want to enter a transaction in the accounts, books of accounts, then you have to have a source document. So here in vouching, we go back. It's like we see the transaction and then we check the source document to verify whether it's the genuinity of the transaction. So we'll go through vouching with an example. Say there is a transaction or there is a payment of $1,320. So the first thing, if an auditor sees such a transaction, the auditor will demand or ask for the source documents such as purchase invoice from the supplier, goods received note, providing goods are received, the original purchase order issued by the company's purchase department, which is duly authorized as well, the initial material requisition slip from the stores department along with the bank statement. So the auditor will be checking the transaction along with all these source documents. All these source documents will be compared to each other and check whether all the amounts and the details are matching as per the requirement. As for the detailed verification, the auditor also needs to check each and every voucher along with the transaction. So there are certain checks the auditor needs to do. The first thing is whether the voucher or the transaction is related to the business or not. If it's not, then that transaction should not be coming in the books of accounts. Next one, whether the values in the voucher is arithmetically correct. The values in purchase invoice, the purchase order, everything is same, and along with the transaction entry in the books of accounts. The auditor needs to confirm that the receipt is actually, the receipt or the payment invoice is actually duly authorized. The auditor also checks the date of the voucher, because same as the financial year which the transaction has been entered. Also, the transaction needs to be as per the accounting principle. So if it's an expense, then the expense needs to be debited and the cash needs to be credited. And if it is entered as, say, cash account debtor to expense account, then that principle of accounting itself is wrong. So that also needs to be looked into. So vouching is basically for the transactions or the items in profit and loss account. So what will be the method we use for examining the items in a balance sheet? There comes the term verification. So, verification is the process of confirming the truthfulness and accuracy of assets and liabilities as presented in the balance sheet. So, for checking each items in the balance sheet, we do verification process. Similar as vouching, verification also is a systematic method where there are certain checklists the auditor needs to check and confirm the truthfulness of the transaction or the particular balance. Again, we will go through an example. Before that, we will check what are the checklists the auditor needs to go through to confirm the truthfulness and the accuracy of that particular account balance. Say for example, say existence, whether that particular asset actually exists. Next checklist, the check on the checklist is ownership, whether the company actually owns it. Then comes valuation, is the value provided in the account balances is actually correct. Next one is presentation, is that item presented under the classified item or classification as per the rules and regulations. Let's see with an example. So here let's say there is the auditor needs to verify the inventory. How he can do so? So as I told, there are certain checks or we call it as assertions. So the auditor can check the assertions or certain checklist through different methods for verifying these balances. First one is existence. So to check the existence of the stock or the inventory, what can be the auditor do? One is physical inspection. The auditor can be present at the time of physically taking the stock of the inventory by the management and confirm the existence or the balance of the inventory. Another method is cut-off procedure. That is, the auditor needs to make sure that whatever stock or the inventory is being purchased in this particular accounting year is being recorded in this particular year itself, and also if any stock is being sold out in this particular accounting year is being excluded from this particular balance. Next one is ownership. To confirm the ownership of that particular inventory balance, the auditor needs to check the purchase invoices. If there are any consignments stock in the warehouses, then that will not be owned by the company. So that amount or the balances should be excluded from the inventory balances. So the auditor needs to make sure it's not included in the inventory. Next one is goods in transit. So if there are any goods in transit, say it's been sold or it's in transit but it's not been reached the customer, or we have purchased but it's not reached us. So what happens? It is goods in transit, but we have included in our accounts or account balances. So to confirm that it's been owned by us, we can check the transport documentation for goods in transit. Next is valuation, whether to check the value is correct or not. To check the value of the assets or the inventory, we can go with the costing method. So the auditor needs to check what method of costing is being followed by the company, that is whether it is FIFO or LIFO, whatever is the method. Based on that, the auditor can verify and check whether the valuation is correct or not. Then comes the presentation. It is regarding, is the item being properly shown under the specified head as per the rules and the requirement. Say inventory needs to be shown under the head current assets. So whether it is being properly provided under the respective head, that is one thing. Next one is regarding the disclosure notes. The auditor needs to also check and verify whether any disclosures relating to the inventory, for example, if any amount of stock is being kept as security, that needs to be provided as a disclosure note under the balance sheet. So all these important matters are being disclosed and is being published to the stakeholders. So this is an example for verification. So I hope you got an idea regarding what is vouching and verification. Thank you for watching. Like, share, subscribe and comment to M.O.P. Classroom for more interesting videos.